Hi guys, I'm Pietro from tradingkitchen.com. Just a few seconds before watching the video, I just want to make sure you subscribe this channel, not only to keep you updated of all my free video contents, but also to contribute to the sharing of this and the others contents in a totally free way. So please subscribe the channel, drop me a like, but above all, I just want you to use the comment section below to let me know what do you think about this content and what you want to see more. Okay, thank you very much, and now let's go back to the video. Hello guys, this is Pete from tradingkitchen.com. Welcome to this new free video content. Today I just want to speak about such a kind of typical way to trade breakouts that most of the retailers actually do. And on my personal opinion, it is not really profitable. Okay, let me first explain what I mean. Okay, so as you know, market will make this kind of movement. Okay, so what is breakout trading? It's simply open a long position here on the breakout. Okay, stop loss here and take profit, maybe 1, 2, 1, 3, as you use to consider your risk and reward ratio. But sometimes market make this kind of heavy consolidation and retracement. Sorry, heavy retracement. Okay, to keep carry on following the primary trend. Okay, so in this situation, if this will be the breakout, profit few pips below, okay, the lower low, and as you see in this case, stop loss is hit. Okay, so how to avoid this kind of movement and all this stop loss? And I'm pretty much sure that you hit so many stop loss, even if the analysis was correct, okay, at the beginning. Okay, so let me first do some premises. Okay, first premise: market need to make a correction. Okay, market price needs to breathe. Okay, so all this correction are normal. Okay, it's just something that you have to keep in mind. Why do the market make this correction, this retracement? Just because they need to get the liquidity. Okay, they need to get the liquidity here to break this structure. Okay, and to keep on going on the primary trend. Okay, so you don't have to not to wait this kind of movement. Okay, this is all inefficiency that price market needs to fill. Okay, and you can be pretty much sure that after a big impulse, okay, with no retracement, market will 99% of the times will fill all the movement, all this impulse. Okay, if we know the trend, we know the price, okay, will breathe, okay, to keep on moving. So why I don't really like the standard way to trade breakout? Okay, so as I told you before, long here. Okay, I will stop loss here, and for the simple reason that when we open a trade here, we do not take all the movement. Okay, as you can see here, this is only an example. Obviously, it's only we take only half movement. Okay, just because here how we do behave here, we wait for the breakout, we wait just a little bit, confirmation, retest, okay, and then we can go long. So we take only half a movement, and it's a pity, just because we know that primary trend is bullish. So why we do not have to take all this movement? So all this, okay, why we have to take all this movement? Okay, we are used to draw the movement of the price like this, but this is quite standard. Okay, out there the reality is this kind of movement. Okay, so if we have a breakout here, as you can see, as the price break this resistance, then makes a very huge movement, okay, against us. So drawdown is heavy to support here. Okay, but then price will make what we thought before. See here, breakout, stop loss just few pips below, TP here, but as you can see, stop loss is hit. What is the key to read this kind of movements, and to my personal way to consider a trade before opening position? We know that trading is statistics. Okay, trading is just a game of probability, in which we absolutely need to keep at least the 51% of probability from our side. So if this is such a kind of regular movement on the price on a lower time frame, 4-hour time frame or 15-minute time frame, anyway, on a higher time frame, what we can see a candle. Okay, maybe, sorry for the drawing, guys, but I'm not an architect. Okay, we have this one. Okay, we have this candle. Let me draw better. Sorry, here. Okay, we have a candle like this. Okay, if we take our Fibonacci in which we have 100% and 100% on the top and 0 on the lower low, what I usually do to go long. Okay, so we are on a green candle, so we need to go long. Okay, my personal rule is not to open a long trade inside a premium position. What is premium? Is here above 50%. Okay, below 50% we have discount. Okay, so on a bullish overview, if I want to go long, I wait for the price to make this kind of movement, go on a discount zone. Okay, on discount on the discount part of the primary swing. Okay, just because we are on a swing trading perspective here. Okay, only here I can wait for a long. Okay, vice versa, if we are in a bearish momentum, okay, I do not consider a sell on a discount area. Okay, just because price did not breathe enough to take liquidity, okay, to break this this support and making a huge risk reward ratio. Okay, just because I want price make this kind of movement. Okay, not 1-to-1. I want for the price to make 1-3, 1-4 risk reward ratio. Okay, so to have lot more probabilities, okay, on my side, I'm just wait for the price to reach a premium zone, and here, only here, so only above 50% of the previous impulse or the previous swing, only above the 50%, I want. I'm looking for a short trade. Okay, how? Well, inside here on the lower time frame, I'm looking for an evidence. Okay, I'm looking for a particular pattern. I'm looking for a structure, a demand zone. Okay, no supply here. Okay, anyway, there are so many triggers you can use that this is only with your own strategy. You have to decide this, but anyway, it doesn't matter. What I suggest to you is consider a short position in a premium, on a premium zone, on a premium structure, okay, in a premium area, of the previous impulse, and consider a long position, a long trade on a discount, okay, on a discount area. So wait for the price to break, for example, on a short overview, to break this support, okay, retest. So here we have evidence. Price confirms that we are on a bearish environment. Wait for the price to breathe here, and then a short. Okay, so I know that you guys are just wondering that sometimes price will not make this this big retracement, okay, and just keep on going, okay, keep on going without retrace. Okay, we miss a chance, we miss a trade, but there are so many other trades that we can take. But the key is not to open the most trade as possible. The key is to drastically reduce the possibility of a loss. If you use this kind of device, this kind of suggestion, you will reduce losses. Okay, so let me show you an example on a euro Australian dollar, a live example. Okay, so let's first go in on a daily time frame, okay, in which, as you can see, we are on a bearish review. Okay, we are on a bearish review. This is the first example that I saw you now with you guys. So price breaks the trend line. Okay, what do most part of the traders in this case traders open along here with stop loss here, okay, and take profit about here. Okay, so to respect their own risk-reward ratio. As you can see in this case, okay, maybe you can open a trade here on the retest, but guys, as I told you in the last video, institutions know that, so we have to be clever than them. Okay, we have to be smart. Okay, what do I usually wait? I wait for this seller dominance to be broken, okay, like in this case. So as you can see, and we can see that on the 4-hour time frame. Okay, as you can see, price tried to break this dominance. It was not able to do that, so it breathed and then finally breaks. Okay, so instead to open a trade here, okay, try to reduce your risk and remaining on risk-reward ratio only, always 2, but try to make your TP closer. Okay, how you can do that? Simply wait. You now know, because you have 3 confirmation. We have 3 confirmation on a bullish review. 1, okay, just because price break the trend line, the main trend line. 2, okay, because price retest and then keep a bullish trend. But first of all, 3, this is the most important one. Okay, just because price, as you can see, begin a channel, price made a higher high, okay, and a lower low, and higher low, sorry. Okay, so price break. Let me remove all the drawings. Sorry. So this is trend line, price retest, break the structure, this supply zone. Okay, what we have to do is wait, which is the previous impulse in previous swing, this one. Okay, so wait for the price to broke, okay, this structure. Okay, and only here, only here we can consider a low. Okay, where, I don't know, in this case I hope you have your own trigger to follow, but in this case I will wait for the price to reach this structure, in which you have, as you can see, this candle. Okay, this candle. So this is a very good one. Okay, as you can see, obviously we already know that, but is the way I trade. Okay, the way I trade. There are so many trades that I missed just because price didn't make this huge retracement and keep on going without me. I don't care about that. Okay, I want to drastically reduce the possibility of a loss. I'll repeat that. Okay, so this is for me very, very important. Okay, guys, so here same thing. We are on a 4-hour time frame and we are on a bullish overview, but as you can see, let's draw a correct trend line. I already told you how to draw if you see my previous videos. Okay, so candles. Okay, so first signal of weakness, price broke the trend line. Okay, so, and maybe already retested. This is retested. This is this is probably a retest, but it's too early for me to go short. What do I wait? I wait for the price to broke. Okay, on the 4-hour time frame, there's support, then price will do this kind of movement, retrace, and then only here I wait for short. Okay, or better, really so much better, look this is a very, 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 very useful candle that you have to consider, just because from this candle, as you can see, a big impulse has started. Okay, so I'm pretty much sure that here there are so many volumes, seller volumes, okay, that needs to be filled up. Okay, just because here we have an inefficiency. Okay, here, so price will absolutely feel this inefficiency and then will probably go down. And as you can see, here we are on a premium area in which we can consider short. If price, remove drawings, if price will break, retest, okay, and break again, we are short. We are on the very, very, very bearish environment, in which I have to be careful to this target, just because for the same things before, we are on inefficiency here. Okay, so this is such a kind of a magnet, okay, for the price. So I'm pretty much sure that price will fill this zone, maybe not reacting, but I'm pretty much sure that price will reach, okay, this zone. So as I told you before, retest, okay, and then short. In this case, I will consider this, okay, this impulse, okay. So I will wait for the price to reach this zone and then go short. Or last thing, we have here another swing. So for the same thing, I will not open a short here, but I wait for the price to reach maybe this will be the most profitable trade. Okay, I will wait for the price to reach this zone, okay, which is the 65%. So one of the most profitable level, okay, that really works. Okay, really works. I will open here a short position. Okay, this is a very huge zone in which, as you can see, price reacted so many times. Okay, so wait for this structure to be broken, retested, broken again, retested. Okay, and I'm pretty much sure that here, as you can see, we can consider risk-reward ratio very profitable. Okay, as in this case, guys, as I told you before, sorry, let's go on a daily. So this, if this is a trend line, okay, look the difference of the risk you take, okay, between this standard way to trade on the breakout. This is the common one, okay, in which you have to consider stop loss here and TP here. Okay, just let me take a risk-reward ratio too. Okay, but as you can see, you have to do so many pips here, so many pips to reach the same risk-reward ratio that you can. Sorry, so this is the first one, okay, but using the same stop loss, look at this, guys, this is very important. If you wait for the price to retest and enter here with the same stop loss and the same TP, so the first risk-reward ratio was 2. You remember, this is 6.4. Okay, what is the difference between the two trades? Simply, in this trade, you have waited for the price to retest a very profitable zone. Okay, the discount zone. So this is very profitable difference, okay, that you have all to consider to really increase your profit. Okay, really increase your profit. Okay, guys, I hope you like these videos, and I will appreciate if you drop in a like and use the comment section below to let me know what you think about. Okay, guys, see you. Bye.